Welcome to Home Buying 101, Season 2, Episode 2. Here with me today and back from Season 1 is Mr. Mario Nevarez from Clear to Close. Mario, how are you doing today?
I am excellent. The weather's good. I'm healthy, so I can't complain. Life's good.
Thank you for being back on the show. Funny story, you were my first episode last season, and I didn't know what I was doing. So the audio didn't even record correctly, where instead of recording into the mics, we were recording off my iPhone, which is like 5-6 feet away from us right now. So,
yeah.
I mean, it was a miracle that it even caught the audio.
Hey, you got to start somewhere. That's the best part, though. But you know what? I'm upset that I'm number 2 this season. So I don't know if we're gonna stay together after this.
We'll think about it. I mean,
we'll
you asked me for a glass of water, and what did I bring you?
A cup.
But what kind of cup?
A cup. I asked for a glass. You brought me a plastic cup.
Hey, you have to talk to the sponsor of that cup about the quality of the cup.
The quality of the cup.
I think you should show the audience the cup.
Look at the cup he brought me. It's great. Look at this thing. He brought me my own cup. I don't even know if he washed it.
I actually did. So if the water tastes a little soapy, it's because I...
Oh, perfect.
So Mario, for the people that don't know who you are, tell us who you are. Give us your backstory. How did you get into mortgages? What are you currently doing right now?
Oof. Backstory. So, Mario Nevarez, I'm the owner of Clear to Close Mortgage. I've been in the game for a little over 20 years. My wife and I started working together 20 years ago. And then about 3 years ago, we decided to open up our own company. We recently merged with a large powerhouse broker, did a mutual merger where, it helped both sides really expand nationwide. So that's in process now. We're expanding our team, doing a bunch of crazy stuff, but, the flavor of what we do and why we do it is still there. We're a dedicated first-time home buyer, brokerage. That's our bread and butter. It's been our bread and butter for 20 years. We've always dedicated to low to moderate consumers, especially first-time home buyers, and that includes the whole gamut. Single moms, underserved communities, veterans. I'm a veteran myself, so we take those files very, very into house, and they're very personal to us, and the team knows that. So, yeah, we've just been on this crazy journey for the last 3 years of building our brokerage, building our business, our brands within our business. So we treat our LOs as their own brand. So we want them to succeed whether they're with us or if at some point they want to do their own thing or migrate somewhere else. We help them build their brand so they're known to you people by their brand and not just by our company name.
That's awesome. And what got you into mortgages?
My wife. A bet.
What was the bet?
That I couldn't process a mortgage deal. I think it was her way of just...
throwing you in?
No, I think it was her way of she's like, I want to date this guy, and if I don't pull him close to me, she reeled me in.
If I don't work with him every day, he's not going to stick around.
Yeah. So, she asked me to take this risk of, I've never done mortgages. I had just got out of the military and had no clue. So she was like, I bet you can't do it. And I was like, oh, bet. Let's do this. And here we are 22 years later. Yeah, 22 years later, doing the same thing.
That's
doing
awesome.
The same thing.
She knew your competitive nature, so
yeah,
she used it against you.
Yeah, suckered me in.
So, of course, every week we talk about what the Phoenix market, Maricopa market looks like. So this week we're looking at about 16,353 active listings. Coming soon, we have 768 coming soon. Pending, we've got 8,946. Median list price of $487,000 with a median sold price of $431 and days on market 68. So Mario, last week it's been like 2 weeks, but I had Iris Baez on here talking about just buyer consultation and the realtor side of it. Mm-hmm. So I wanted to bring you on, of course, because you really can't buy a house without getting pre-qualified. So I wanted to bring you on, of course, just like I did last year, and we can talk about the pre-qualification process and go from there. What does the pre-qualification process look like for a first-time home buyer or someone coming back into the market, buying their second, third investment property?
Yeah. So, regardless of all the myths that are out there, there's always these, this is really how you do it kind of thing. There's really one recipe to it. First thing first is credit. Review your credit, see what's on there, what's going on there, review your income, calculate your debts, and see what's going on there. That's the bread and butter of every deal. The rest of it is just how you put the file together. But the biggest things is if you got bad credit, you can still get a house, but it's going to affect your rate. So if there's things that we can fix on our end, with the client, and we don't want to hold up the process for the realtor either, but that's where they become our partner in this. We consult with them also. We're like, hey, if we hold off a month or two and get their credit score a little bit higher, it's going to benefit them to get the program they want. And some realtors are really good about it, and they say, yeah, let's do it. And some are like, no, just get them into whatever because they want to close on something. Mm-hmm. But our game plan is to put the client in the best situation for them. Mm-hmm. So, first thing, we review credit. And we go through everything there. If there's debts that need to be paid, if there's collections, if there's whatever's on there, we're going to work through that. We're going to roadmap that first if there's an issue. If there's not, then we look at your income. If everything's good there, then we go, okay, what do your assets look like? And this is where most people falter because there's all these programs now that are being presented as free money. And it's really not, because it does affect them in the rate. It does affect them in other areas. Repayment status. Sometimes these grants need to be repaid. Some are obviously free. So we let them know you can get this, but it comes at a cost. And then we show them what it costs without it. And realistically, if there's no money in your savings, we don't want you to be in a place where you're in a house and you're house poor.
Of course.
That we never want that. We want there to be residual money so that you can get the things that you want to put into the home. So we roadmap everything with the client, and then once they have their game plan, then we give the pre-qual to the agent. Mm-hmm. And we set a cap at that. And whatever the cap is what the client wants. It's not what we want. Mm-hmm. Obviously everybody wants to make the most money they can. But realistically, this isn't your house.
Of course.
This is your client's house. It's their dream. And you could turn that dream into a nightmare real fast, especially if they can't afford it.
So what documents does someone need to get pre-qualified?
So what we call your average consumer, right, is your W-2 hourly employee. So we're going to ask for your W-2s, the last 2 years, your pay stubs, and your bank statements. That's common for almost, I would say, 60 to 70% of our clients.
What about your taxes?
We don't really need those unless you're self-employed. Or if you have disability benefits and you're being taxed on them for some reason, then we will look at your taxes. But every client is different, and we go through that once we have when we start our pre-qual form, that's in our conversation with them. Like, so what do you do? Where's your income coming from? And if they say, well, I only get, pension and disability, those are the documents we need. We don't need anything else. If they're being taxed on that pension, then obviously we pull taxes to make sure that what we're calculating is the right amount.
Okay. And then how long does the pre-qual process usually take?
Depending on the loan officer. There are some loan officers that can rock out a pre-qual in 30 minutes to an hour. And there's some that love to take their time, and they will take as much time as the client needs. And that's what you really want. You want to have an honest conversation with the client, because sometimes they'll fail to disclose something. They'll forget to tell you that they have child support, or that they have a garnishment, or something that's coming up. So the more time you can spend with your client, you build that relationship with them.
And of course, they can also tell you, hey, I work 40 hours a week, when they've only been working 30. And that always throws a little bit of a wrench in everything.
Yeah, and that's why spending time with them, having them bring in all their documents when they come see you, we try to get the clients to do an online application where they can upload their documents. So by the time they come see us, we've already seen the documents. It just makes the process a little bit easier for them.
Okay. What factors do you consider when determining the amount that someone can pre-qualify for?
Obviously, their debt to income. So, how much is coming in and how much is getting paid out. And then realistically, we ask every client, we're like, what are you comfortable paying? Because you can want a $700,000 house, but you're not going to get a $200,000 payment on that unless you put a lot of money down. So we have to sometimes bring them down from that want and what do they really need. And then the desire for them is to really explain to them that the first 5 to 10 years, you might move out of that house because you're going to find something better. So your first house may not be your forever home, but at least let's get you in there so you learn how to manage your finances through home ownership. And then, we can go into the next steps, which is you could become a real estate investor with your current property. Go buy your next home, rent this one. You could repeat this process over and over. And we've seen thousands of people become, now self-employed on their own, basically just off their rental properties.
Okay. And I've seen this a lot. Maybe you can explain this. I see a lot of loan officers on TikTok and Instagram. They'll seriously sit there and be like, hey, this is your gross income. The bank will let you have 45%. So this is what it looks like. And then we subtract your debt. So if you have a $500 monthly payment or stuff like that. So maybe you can run us through like maybe a quick, let's say $10,000. So just break it down for us. If my gross income is $10,000 at 45, that leaves me with 4,500.
Yeah. So that's, if your income is 4,500, that's what we're going to call it. That's your cap. That's your housing ratio. So there's two different things. So there's your housing ratio and then there's your full back end ratio. So your housing ratio is what you can afford house-wise. And then the one on the back end is that housing ratio plus all your other debts. So realistically, that back end number is going to look different for everybody because what's on your credit. If there's 2 car payments, 3 car payments, and if you have one of those $1,000 car payments, you're really going to hurt that back end number because it's going to push you into that 60, 70% of your gross income going to your debts. And the banks don't like that. They want to cap that back end at 50, sometimes 55 if you have.
Depending on the program.
Yeah, depending on the program. It really depends on what you have as a compensating factor. So if you have a great 401k, if you have great savings, a great retirement, and we can show that, then you're less of a risk of default. That's the biggest thing for the bank is, can you repay this loan over the term of 30 years? And if you have compensating factors like, well, I have $300,000 in my 401k, even though I don't need it, it's there if I need it. The bank goes, yeah, we can lend a little more or let them have a little more debt because we know that there's money there to repay. When there's not, obviously they're going to look at it and go, no, we don't want to take this risk.
So, but basically, let's say at that $4,500, if you've got a $500 or $1,000 car payment, it brings you down from $4,500 to $3,000.
To $3,200 probably. Yeah. So then that would be, you take the current market, you're probably somewhere in the 400,000 range. Right. And then that 4,500 range, you're up in that 500-600 range. So yeah, it takes a drastic hit on the kind of house you want.
And then when you're looking at the payment, let's say other than principal, what else is included in your mortgage payment?
So you have your principal and interest, you have your property taxes, you have your mortgage insurance. So that basically covers the bank if you default. Depending on the loan product you'll get, and depending on the amount of money you put down, that could be on there for the life of the loan, or you can ask for it to be removed at a certain point. You'll have flood insurance. If it's deemed necessary, it'll be in there. And that's a separate cost. They factor HOA just to look at it. But in your monthly mortgage payment that you send your coupon out, it's going to be your principal and interest, your taxes, and your insurance, your escrows. That's it.
So how much do you have to put down to not have PMI or mortgage insurance?
Well,
20%?
20%. Yeah, 20% on conventional. For my veterans out there, VA doesn't have MI. So FHA is on there for the life of the loan, until you refinance it out of it into a conventional. When there's enough equity, USDA has MI on there, same thing. Right? Just depends on the program you have. There are some products out there that are with certain banks that may not have mortgage insurance, but those are only portfolio loans within those banks.
Sure. And then what's the difference between a pre-qualification and a pre-approval?
Oh my gosh. We get this all the time. This is always like the
Yeah, I'm giving you the good questions today.
So, the pre-qualification is, to me, is you've glanced at the documents, you've made an assessment as a licensed originator that this person qualifies. You ran it through your automated system, and it says, yes, based off my experience and my knowledge, you are good to go look at a house. To me, a pre-approval is you've sent in your documents, they've sent it to that investor, and they've already reviewed those. And they have basically a permission slip from the lender that says, okay, everything is approved, we just need a house. So there's two different things. Sometimes they get jarbled together because you can do both at the same time. Just depends how you work with.
Pre-qualification is more of like a 30,000-foot view compared to pretty much
a 5-foot view. Yeah,
yeah, a 5-foot view with a pre-approval.
Yeah.
Okay. And then how does credit score impact your pre-qual?
Credit score is everything. It's your digital resume. That's what I call it. It's your digital resume. So the higher the score, the better the rates. The lower the scores, that's where they're going to hit you. And if you're looking for the best deal, you want your score over the 680 mark.
Yep. And what's the lowest right now you can qualify with as a credit score?
Under 580. So it's not impossible to get a home under those scores, but there's got to be a lot of compensating factors for it. There's got to be a reason why the score is so low. And sometimes we can make those work because they've gone through, let's say, a divorce. And the spouse that was supposed to take care of certain debts didn't take care of them, and it affected the other person. There's tons of reasons. Lost your job, medical. There's so many factors, but that's why we take credit so seriously and look at all those things, because sometimes, even with the divorce decree, we can send those to the credit agencies, and they make them the responsibility of that other person, and they'll get them removed from our borrower.
Can you tell me about any programs or incentives available right now for first-time home buyers?
Oh my God, there's so many. So there's probably about access to us. And I'm speaking only for our brokerage, we have access to about 16 different down payment assistance programs. Everything from a forgivable grant to a 5-year forgiven or a 10-year forgiven. And we lay those out for the clients. And it really depends on their need. Some clients say, I have enough money for my down payment, so we just go look for closing cost assistance. Or if we get a client that says, and an agent that says, hey, we're getting seller concessions, we just need down payment money. Cool, we go after that. And we really tailor that to the client. And if they ask for the most amount of money that they can get, we show them on paper exactly what the payments look like for each program. That way they make the sound decision. So I know a lot of loan officers, just want to put somebody in a product. But when you let the consumer decide what product they want, you're giving them the keys. And that's what you want.
Can you tell me about the 10K grant that you guys are promoting recently?
Yeah, so we just partnered up with a lending partner of ours that's taking your typical $5,000 grant, and they're doubling down with their own money. And so they're making it a true 10K where $5,000 goes to your down payment, $5,000 goes to your closing costs. Now, that alone helps the consumer, but it also helps the agent in negotiating, because now they're not having to ask the seller for concessions, which might be a sticking point on their negotiations. So we want to give our agents the best thing that we can, right? Give them the best ability to them do their job, because we feel that they're our partner, and we want them to have access to those tools when they need them. So if they say, hey, we're still going to get the seller concessions, then we can modify the program where they don't need that much money, and just make sure that the client has enough for their down, and then everything else is covered by either that second half of the down payment or seller concessions.
And then when it comes to loan programs available to first-time home buyers, it all just depends on what they need. They can go FHA conventional, if they're veterans, VA, USDA,
if you're
bank statements,
bank statement loans, DSCRs. If you want to become an investor and don't even want to buy your first house as a, you can go straight into investing. It just, the roadmap is what the consumer wants. For our first responders out there, there's specialized programs for them that give them an extra 1 or 2% in assistance because they are a first responder. So it's given to them as an incentive because of their jobs.
Yeah, there's a lot of programs out there for teachers, first responders. There's different programs.
Yeah,
so of course, there's no cookie cutter loan for everybody. Everyone has their individual situation. So you guys are going to look at it as an individual instead of
we look at every file individually, because we always get the my friend got this, or my cousin, my family member got this, and on paper your credit and income can look the same, but your files are completely different, because there's something in there that's going to be different, and that's just the reality.
How does employment history affect pre-qualification process?
To an extent, most, everybody's going to say you need 2 years of employment, but if there was a gap because you were sick, that's okay. We just have to look before that. Were you working before that, and make sense of that piece of time, right? If there was a gap because you were hurt or you left the country on a mission. We just did a deal for a gentleman who he took 2 years off to go do a church mission. And because we were able to show that he worked prior to those 2 years, and then currently he's in his house. So employment history the standard is 2 years, but there's exceptions to those. So there's exceptions for people who just got, their documentation. If they came in as a refugee or under asylum and they've been working for a year, they can buy a house because obviously they came here as an asylum, as a refugee, and now they're working. So the clock starts the moment they got their residency. So there's tons of options. And we can definitely look at that case by case because it's not going to be the same for everybody. Nobody's ever worked at the same place, at the same time, for the same amount of time.
Okay. What are some fees that are associated with the pre-qualification process?
With your pre-qual, really the only fee that I've seen, and this has come up recently, is the client's credit report fee. Other than that, there shouldn't be a fee just to look at your file. But the cost of credit reports have gone up astronomically in the broker world and I'm sure in the retail world. So that's a cost to the consumer. And that cost to the consumer, if they go into contract, is already included as a fee. So if you pull their credit and they're charged for their credit, then if they close on the deal, it's already included in their fees. So they're not going to get double charged, but that credit is theirs to look at.
That's awesome. And then am I able to lock in an interest rate during the pre-qualification process?
There are some institutions that say yes. The truth is that normally you can't lock until you have a property. That's the majority of the cases. There are programs that say, they call them, your lock-in shops and those type of deals where you'll submit your full file under a to be determined address and they'll lock a rate, but that rate can change because let's say you're looking in Maricopa County and they purchase in Yavapai County. Well, that pricing was based off of Maricopa County, so they're going to readjust that pricing to whatever's in Yavapai County. Or if you're buying in Phoenix and they're buying in Tucson or whatever that case is. So just make sure as a consumer you're reading all your disclaimers because there's a lot of disclaimers on those. But we won't lock until we have a house.
And then, of course, this is a very common question, I guess. How does getting a pre-qualification affect my ability to make an offer on a house?
It's everything. It's your permission slip. So if there's a realtor out there showing you a house without a pre-qual, he's doing himself and you a disservice. Because the reality is that you aren't pre-qualified at that point to go even look at a house. Now, again, as a consumer, you could tell them that you have 700 FICOs and all this great money and all this great things, and then they're going to send you to their preferred lender, or you're going to go to your lender, and all of a sudden you have a 610 and no money, and it changes that pre-qual. It changes that, and I get it. Sometimes you're eager to jump on it, but that's where you got to have a lending partner that's willing to take those calls in the afternoons, the evenings, the weekends to make sure that the consumer has a pre-qual.
Okay. And then, of course, with a lot of people going to new builds and getting offers from the new build lenders, are people able to come to you and say, hey, this is what I'm being offered, and just have you pretty much take a second look? Yeah. There's always second looks. I tell our consumers that come to our office, we tell them to shop around, to compare us to somebody else. And if that other lender is beating us, we want to know why. It works a little bit different in the home builders because they manage their funds a little bit differently, so they can sacrifice a lot more on their interest rates to get the consumer because they can hang on to those deals. So it's a little bit different on how they structure their funding. Some of them offer great deals. I'm hearing rumors of builders going out there saying that they can give people 3% right now. But in the long game, you're going to be charged for it somewhere. Somehow, it's going to come back to you as a consumer. But with us, we always want our clients to go get a second look. And if they want us to look at their documents, we'll gladly take a look. Yep. And then you being a broker, what's the difference between working with you as a broker and then working with someone that works at maybe a retail shop or at a bank?
The biggest difference is that we're not locked into one investor. We have the ability to look at 27, 30 different banks, see what the best option is for you. And because we're working directly with the investors, it's their risk that they're looking at. So they may not have overlays. They might just go by what exactly the guidebooks say, compared to some of the retail institutions where they put overlays, where they want a little more documentation so they feel comfortable with the files. And that's okay. That's how they mitigate their risk. But for us, you're working directly with us. And there's no more, it's the loan officer and that investor. It's not, 200 other people that are going to be calling you and trying to filter through your files. So you're working directly with the ability to look at multiple options for your lending needs.
Okay. And then let's say, for example, I've got a low credit score or just limited credit history. What can I do to improve that?
Depends on your file, really. There's some people that have a ton of credit. They just don't use it. We've had some consumers that came in and they're like, well, I only have a 580. And I'm like, well, it's nice because you have 4 credit cards, but they're all zero balance, and last time you used them was, September of 2022. We're like, you got to use your credit for it to build credit. And then, of course, the ones that have limited credit, where there's no credit, we will help you along the process. There might be a recommendation for a secured credit card to help you establish credit. Typically, if it's a spouse, joint accounts, right? Like, are you on your spouse's account? So we could build that credit history for you. Just depends on that particular scenario, because every credit history is different. If you have zero credit, that's good, because we can do loans with zero credit. Okay, there's things that are getting factored in that are non-traditional credit now, and they're actually going to start pulled into your approval process, which is your rent history, your cell phone, car insurance, water bills, whatever you've paid in your current status for the last 12 months, we can factor that into your credit score, and we can actually help build your score that way.
Okay. What are some common mistakes that first-time home buyers make during the pre-qualification process, and what can they do to avoid them?
I think the most notorious one is buying before you close on your house and before you get pre-qualified. You get the pre-qual form and people go out shopping for a house and they put an offer in, and all of a sudden they want a new car, new furniture, new this, and they add those new debts. Well, those new debts are going to affect that pre-qual. So our biggest thing is, once you get pre-qualified, don't go buy anything new. Don't go get that department store card that they're giving you 20% off, for running your credit, because that's going to affect you. Wait till after you close and you've gotten in your house. And if that's really a need that you have to have, by all means, that's your decision. But until that, from pre-qual to closing, don't touch nothing on your credit. Just pay your bills on time.
You have to behave.
Yeah, you have to behave, because unfortunately, we've seen some where people go buy a brand new car because they think it's not going to show up. And the investors do a look. They do a look at closing because they want to make sure that you don't have any additional debt. So they're going to have that on there. So just don't touch it, don't touch it, don't touch it until after you close.
What about changing jobs in between the process?
And
not letting you know.
Let your loan officer know. Let your loan originator know. If it's a dire need to change jobs, you can do it in process. As long as we can get a contract from that new employer, something in writing documented that, this is your new pay, this is it. We can run with it. But don't change jobs and then go, oh yeah, oops, I forgot to tell you, because that's no.
Can I quit 2 days or a day before we close?
No. Yes, don't quit your job either. Don't quit. Yeah, don't quit your job. Don't quit your job. Again, don't do anything from pre-qual stage. Don't change anything until afterwards.
But if I quit, are you going to find out though?
Oh yeah. So they do verifications of employment, obviously, and then there's a verbal that is done at closing. So you might think you're getting away with it, right, when you're signing, and then the investor is going to call your employer, and if they say, hey, Francisco doesn't work here no more, everything stops right there. Everything stops there. But again, if you got this magic offer that's going to pay you a lot more money, just let your loan originator know, so they can put it into your file, because it's going to look better. If you're making more money, it's going to look better.
No, but the common one I've heard from all of our friends and all the people we work with is, they quit 2 days before thinking you guys wouldn't find out, just because they're sick of their job or something.
Yeah.
And they're like, oh, I'm almost in the house, I can quit.
Yeah. We've gotten a few of those. And then if they for some reason don't catch it, it's rare, but they do. They will catch it all the time, and then or later on, a few months down the road, that file gets audited, because once that file stays with that bank or gets sold to a servicer, they might audit your loan and go, hey, let's just call that employer to make sure they worked. And they're like, no, they quit. 2 days before closing, there's this beautiful little document that you sign when you buy a house that says that if you ever lie to them, they can call that note full and due. So they send you this pretty legal paper that says you have 30 days to pay the house off or sell it or pay them off because you lied on your application. So I've only seen about 3 of those. Actually, I've seen about 2 of them last year. It wasn't with us, but I've seen a couple being called full and due, and it's not pretty because it creates chaos in that house.
I mean, you either have 30 days to
Pay
sell
it
it or pay it off.
Sell it, pay it off.
Which pretty much everyone's going to have to, if they're going for that loan, unless you won the lottery, you're going to have to sell it off.
Yeah, and then, that's where, unfortunately people will get, they won't have the ability to sell, so they have to either foreclose or, something has to give at some point, but again, if you're in trouble at some point, like, you're not going to be able to make your mortgage payment, or you did something like that and they've sent you that letter, call your original loan officer, call your realtor partner, because we're going to have the resources that we need to go to see if we can fix it or save it, or maybe it was just a misunderstanding. Maybe you quit and then 2 days later you went back. There's always a circumstance and there's always a solution. You can't just go, like an ostrich and put your head in the dirt and hope it's going to just go away. It's not.
Okay. So with your 25 years of being in the loan industry, just can you give me some success stories that you've had over the years?
Oh my God. There's so many. I think for me, the most meaningful stories are the people that didn't think they could get in a house. And not just because they were, a single mother, just because there was no knowledge given to them on how to buy a house. And then you get them in the process and you walk them through it. And every story is very similar to us like that. We get them in their house and they're so appreciative of that because they're now building a legacy. To me, every first-time home buyer is a success story. Every person who buys their first investment is a success story because they're stepping out of their comfort zone to do something that's scary. It's super scary to buy a house. Super scary to buy a second house. And then, we have some partners of ours that have bought 6, 7 houses now. They're now savvy investors.
They're playing Monopoly.
Yeah, they're playing Monopoly now, and they love it. I think one of the most recent stories that stands out for us is a good friend of mine. We did his loan originally about 17 years ago. Bought his first house. He lived in his house, made his payment, never took any money out, never did anything. But he always promised his wife that he would buy her a new house, like a brand new build. And, over the last 16 years, his health has been a little sketchy. And he goes, right now is the time while I can still work and get her that house. And so he called me. He's like, I want to sell my house, but I want to buy a new build. This is the house I want. And he goes, I'm not going to anybody else. He goes, I've trusted you for the last 16 years. I don't want anybody else. So we called up a realtor partner of ours, and we're like, hey, what can you do? What are we looking at? And we gave the client 3 options. Those 3 options were fix up the house, sell it at the top of the market. List it at what it's currently valued at right now, and you pay your agent fees, and you go that way. And the realtor himself, who's also an investor, he goes, I'll take it off your hands at this amount. And when we did the numbers across the board, his profit was within $1,500 of each other. So he wasn't taking a loss. And the client was like, well, I want the most. And we're like, well, the most is you take this investor option and you get the money tomorrow. And we're not holding up the process. These other 2, one requires you to negotiate inspections, all these other things that go through the real estate process. And then you get your money. This one requires you to remodel the house, go through that same process all over again. And the outcome benefit is $1,500. So he went with option one. He got his wife the new build. They signed on their house. And about 3 days after he closed, he called me. And he goes, I'm so thankful to you and your wife. He goes, this is her dream home. He goes, and I was left with enough money after my down payment that I told her, don't even bring our old furniture. I'm buying you everything new. And to me, that was the gratification. And he's like, you know what? He goes, when I furnish the house, he goes, we're going to do a party. He goes, and you guys are invited. That's why we do what we do. These are the stories that we can tell our kids, we tell our clients, we tell the people on social media, because those are the feel-good stories.
Yeah.
Those are the feel-good stories. And for someone to, remember us 16 years later to do a loan, that means we've done our job correctly for the past 16 years.
Of course. I promised myself I wasn't going to cry today, but you almost got me there.
No, it is. It's
it's a heartfelt story, and I love those kinds of stories, and that's awesome.
Yeah, and there's tons of them. I mean, we
What about someone that, for example, went to another lender before and they were just getting completely just taking advantage of, and when they came to you guys, of course, you guys were able to show them, hey, this is where they're charging way too much on fees. They're doing this.
Yeah, and whatever the other lenders charge is their prerogative, right? That's how they run their book of business, and there's no right or wrong way, right? That's just the way they do business. But when they come to us and, if we can save them money and they see that difference, clients appreciate that. They appreciate that. But they also understand you have to run a business. So sometimes you have to, for me as an owner, as a broker owner, I'm like, okay, our cost to our consumer, our overhead is matched. Everything's good. If I go higher than this, then I'm not practicing what I'm preaching. If I stop doing that, then really I just become just like everybody else.
And that was my question. So I'm going to put it in simple terms. Like, let's say, for example, we're looking at a Corvette right now, and dealership A is charging $20,000 over MSRP because they know they can get it because it's a limited car. And then dealership B is just charging, hey, MSRP is $70,000. We're not going to charge 90, we're charge 70. How does, other than going to another broker, or if that's the case, going to another loan officer, is there any other resources people can see to be like, hey, I'm not overpaying for what needs to be, I need not the bare minimum, but at least what's reasonable in.
Yeah. And that's, again, right, as a consumer, that's your, kind of your due diligence, right? Do your homework on, call around. Call other companies, see what they're doing, right? Like for me, right, in that scenario where that Corvette is $90,000 at one place and $70,000 at the other, the reality is I can go pay $90,000 for that car, but they're not going to get any more business from me. I'm going to go pay $70,000 for that car, and I'm probably going to refer 3 or 4 people to them. So you can make it up in the long game. Right, and this game isn't. If you're in this game for short, I mean that's your prerogative. But the term is long term.
What resources do people have to kind of check that they're not getting? I mean, they're paying reasonable prices and not getting fully taken advantage of, I guess.
I mean, there's so many now. Obviously, with social media and the internet, you can actually Google what's the average cost, for a broker. What's the average cost of a retail bank? What's the average cost of my interest rate? What is the rates today? Right, and you can compare apples to apples at that point.
Because I just feel like being in the industry, I've seen so many people just get taking advantage of by other lenders saying, "Hey, this is your rate," and they're buying down your rate, of course, trying to help you. But what's the cost of getting that rate to be bought down is so much more.
Yeah,
that's hurting you even more.
Yeah, and sometimes and we show our clients when they start talking about buying down rates and looking at those things, we show them the cost and what they're actually going to save on their payment and how long it's going to take them to recover that amount of money, right? Let's say that's $4,000, but it only saves you $10 a month. But you're paying, 6% interest on that $4,000. How long is it going to take you to get that money back? Is it worth it, right? Is the juice worth the squeeze at that point?
Exactly.
Right? And, we're always wanting to educate our client. We're like, look, we understand the market is always fluctuating, but there's going to come a time where rates come down enough to where that incentive is going to be worth it at that point. Right now, it's not. right? Obviously, we've trickled down from last year, which is great, but we're not going to have 2021 where we were in the twos. That was an anomaly. So is the difference of $10 a month worth it to you to pay $5,000, $6,000, $7,000 for that? And we really leave it up to the consumer at that point, and they go, well, it's only $120 a year. Okay, so you tell me, because I'm here to give you all the options. You just got to tell me which one you want and which one fits your family, because that decision to lock the loan, to do all those things, that should be a joint thing. It shouldn't just be the LO saying, well, I'm locking your deal because I feel it's the thing to do. We've had some clients that don't want to lock until like a week before closing. That's on them. We just tell them that we don't know what the market's going to do, so it may be better, it may not.
The juice might not be worth the squeeze at that point. So what other advice do you have for our consumers as first-time home buyers looking to go into the process of purchasing a home?
Look up your partners. I mean, we have so much access to information now. You can look up the agent you want to work with. You can look up the company you want to work with. You can look up the loan officer. You can use NMLS Consumer Access, right? That's an access that gives you the ability to look up every loan officer nationwide, and it tells you who they work for, where they've been, and if they have any complaints against them. And obviously, if you want to work with someone, you want someone that hasn't been in trouble. That's just the reality, right? You wouldn't go to shop at a car dealership where the guy that works at the car dealership has, convictions for stealing cars. Like, it doesn't make any sense. So, yeah, there's so much consumer access, and do your homework. Do your homework on everybody from your realtor, your loan officer, your insurance agent. Obviously, the appraiser and the home inspector, you really won't know them until you're in contract or you make an offer, and they're independent third parties. That's which I love.
Well, yeah, but the home inspector, at least, they're a little easier to look into.
Yeah.
Appraiser, you can't really look into.
Yeah, appraiser, you won't know until after your house is done and been inspected. We won't even know that. That's the beauty of it now, is that we don't have access to them, so we can't tell them to manipulate the numbers to make it look better for us.
So, of course, if anyone does want to start the process, what's the best way, or what are the channels that they can contact you at?
So for us at Clear to Close, you can reach us through social media, through our Instagram, Clear to Close Mortgage Official. We are on Facebook. You can reach me directly. My phone number is 623-255-2203. You can reach my team at 480-375-0908. We're always available. We're always available. If you just have general questions, hit us up. If you want to start the process, give us a call. We'll talk through it. If you prefer email, we'll email. But yeah, we're slowly getting into the TikTok and the YouTube world. I'm not very social media savvy, so I have a team of people helping with that. So eventually we'll be on those platforms.
Well, Mario, thank you for being on the show. And of course, thank you for everyone listening in today. And of course, if you have any insurance needs out there also, please reach out to us here at Green Planet for any questions on home or auto insurance here in Arizona. So, Mario, thank you for being on the show.
Thank you for having me. I just wish I was number one, not two.
Maybe season 3. We'll talk about it.
All right, good.
All right.
Perfect.
Thanks, guys.